Whenever you are ready to invest in index funds, get ready to do some research. Selecting from a number of index mutual funds and lots of ETFs, exchange-traded funds, can be a difficult task, so where do you start? The 5 tips to choose the best index fund are: 1. Start with the type of investment that you need for your portfolio. If you want long-term growth, you want stocks. If you need stability, you want bonds. Within these 2 large categories of stocks and bonds, you want diversification. You want both US and foreign stocks, and you want both large company and small company stocks. 2. Decide whether you want an index mutual fund or an exchange-traded fund, ETF. ETFs may have lower operating expenses but cost a few bucks to buy and sell. They are often your best option for long-term, buy and hold, no-touch or tinker investments, but not your best option for accounts where you are making regular contributions or withdrawals. If you're investing in a taxable account, the ETFs may be slightly more tax efficient. 3. Always look to the bottom line. Immediately rule out all of the load funds and be sure to compare annual operation expenses. 4. Examine the index behind the scene. A solid fund house rests on a solid foundation, and so does a solid index fund. 5. Find out the returns. An index fund will do as well as the index it represents, minus the expenses of the fund. Stocks can be expected to return more than bonds over the long run. With greater volatility, small-cap stock funds can be expected to perform better over the long run than large-cap stocks. So these are the 5 tips to choose the best index fund. Thanks for watching this video. If you enjoyed this video, please do not forget to like and subscribe to our channel. In this channel you will get information about various business-related topics such as money, investing, real estate and online businesses. Bye.